What is going on, people? It's Matt from Liquid Loans, and in this video I'm joined by Cristian, our CEO, and we talk about the latest developments and updates straight from the Liquid Loans HQ. So with no further ado, let's go. Hey Cristian, thanks for taking the time to come back on the YouTube channel.
Yeah, nice to see you, Matt. Thanks for having me on.
Yeah, great. Now I know you're a busy guy, but we're all waiting for some updates and things have been going great, so we want to hear it from the horse's mouth. How are things going at the Liquid Loans
Mate,
HQ?
it's going amazingly well. Honestly, I'm feeling humbled and very thankful for the show of support. I think we're now into day 6. Fantastic show of support from the community. We're really happy about that. And I think, as you know, we've recently had the Godwell join us, which again is, to be honest, it's just humbling. I'm as much as being overjoyed by it, I'm also humbled by the fact that not just the Godwell, but the entire community are actually getting behind the project, and having the Godwell join us is fantastic.
Yeah, it's amazing to see people from, all different backgrounds putting their economic energy towards a true DeFi protocol, from, the smallest guy up to the biggest guy, the Godwell. I think it really is quite humbling, like you said.
Yeah, as I said, we're really pleased. And look, I guess the other thing to bear in mind here is that we're just into day 6. There's still a few days to go. We're kind of hopeful that, obviously some other players may decide to join us as well. And ultimately, I think from our point of view, we're obviously building this for the community. There will be people that decide, hey, they're not sure, or they're sitting on the fence and they're not certain about how this will play out. There are some consequences of doing that, and I think both positive for everyone, and I'd like to explore that a little bit more. And perhaps maybe the example I can cite is that whilst there will be a range of people that are showing support, and we're very happy about that, and we totally accept that not everyone is going to be in a position to sacrifice, and we totally understand that. We are building this protocol for everyone, so it's not, no one's going to be excluded from using the protocol. People will be able to use the protocol in the future, even if they decide not to sacrifice. There are some consequences of that, though, and I just wanted to explain and maybe highlight through an example as to how that would play out. So anyone in the future, particularly some of the larger bag holders of Pulse, could come in and take out a loan and do that at a very safe level. So we've spoken about 1,000% collateral levels. Personally, I think that's quite an extreme, and you understand why. That I don't believe the market will never dip, much more than 60% in a given day, and certainly hasn't done that for Ethereum. It hasn't done that for Hex. It certainly dips larger percentages over a period of time, but never in one day. But anyway, let's just work on the basis that someone takes out 1,000% loan. If you're part of the sacrifice set and you obtain future loan tokens and you decide to use the staking pool, what's the benefit of that? Well, let's just play this out. Let's just assume you and I are the only ones in the staking pool, so we're getting all the rewards. Now, if a large bag holder comes in, and let's just say, for example, and it's a crazy number, but this is not, I think it will be very conceivable in the future that we end up with someone, say, taking out a loan for $100 million. Right? So that's not an outrageous number if we think that Pulse is going to continue to appreciate after launch. Yeah. And we all sort of hope for that, and I think it will happen. So let's just say that there's $100 million that comes in. Now, based on the borrowing fee, effectively the cost will be around $500,000. Now, that money goes into the staking pool. Now, before I explore that, $500,000 is a lot of money in anyone's language. Even for a large bag holder, it's still a lot of money that you're having to incur by taking out that loan. But I guess in relative terms, it's not a huge amount, but I still believe that it's a lot of money. And so if you and I are the only ones in the staking pool, we get to share that particular fee. So that borrowing fee is going to come to us because we are loan token holders, and we're using the loan token and using the staking pool to receive those rewards. Remember, the rewards we get will be based on borrowing fees as well as redemption fees, and the borrowing fees will come to it as USDL, and the redemption fee will come to us as Pulse. But that's a significant amount of money. So what does that really mean? What are we really getting at with this? What we're basically saying, I feel, is that everyone that's using the staking pool will get to share in some of these rewards. And for people that eventually start using the protocol that aren't necessarily sacrificing and don't necessarily have loan tokens, they will provide significant economic energy for people that are part of the staking pool. So to me, it sort of suggests that, look, there is another play here, and that would be, if you do have a large bag and you do believe in what we're trying to achieve here, it's probably worth your while sacrificing to obtain some of those loan tokens just to mitigate some of those costs. And I think, I know Jexxa's put out a video called Zero Cost.
I saw that.
Fees.
It's really good.
Yeah.
It's really
really good, because it kind of suggests that, you don't have to be a big bag holder to manage your transaction costs better. So what does that really mean? It just means that by having loan token and having them in the staking pool, you're basically reducing the potential transaction costs that you have every time you take out a loan, because those borrowing fees potentially are being channeled back to you as a consequence of that. So whilst people will be able to use the protocol, and there's no, we obviously want the entire community to use this protocol. If you decide not to sacrifice, that's absolutely fine. But just remember that when you do start using the protocol, those fees will be provided to the community that decided to sacrifice and actually have loan tokens staked in the staking pool. So from my point of view, it's almost like a win-win, but we'd sort of urge people to really consider that aspect, because I think what's happening, and I could be wrong here, is people may be sort of sitting on the fence a little bit, thinking, I'm not sure if I really want to sacrifice. I'll wait till the protocol's running. And that's absolutely fine. And I think it's a conservative approach to take. But having said that, there is a consequence. And the consequence is, if you don't have the loan token, you're not reducing those transaction costs and maximizing your position. So people that take advantage of the full ecosystem, whether that be through the staking pool or the stability pool, are going to get a much better outcome than those that just use the protocol to borrow against.
Yeah, that's actually really interesting. Like you said, if it's only me and you in the staking pool, we get 50%, right? Let's say we have an equal amount of loan tokens staked. And if that huge bag came in and had to pay that $500,000 for a fee, great for me and you. We share that.
That's right.
$250,000 each. But for all the other people that did have loan token and could have staked it, and maybe they didn't sacrifice, or maybe they just sold it and thought it was a trading token, they're not going to be only missing out on that one big fee. But, as more and more people use the system, as more and more volume comes in, that token is the fee generating token of the system. So it is like that golden goose, right? Why would you want to get rid of your golden goose? Or why wouldn't you want that? Because of course we all want price appreciation in crypto and in assets. But when you've got an asset that really you just park it somewhere and it brings in that residual income, it's kind of a no-brainer. So I definitely understand where you're coming from.
And so, Matt, from my point of view, I totally agree. And it's interesting because one of our taglines, which we've been using a fair bit, is never selling. But people just presume that we mean pulse. Now, this is not financial advice, but from my perspective, there's two tokens I'm never going to sell. One is pulse and the other is loan. I don't want to get rid of a high-yielding token like loan token. Yeah. Obviously, I'll be able to use USDL in a variety of ways, and some of that may be through the stability pool. But those two tokens, the yield-bearing token of the loan token itself, and obviously Pulse, I never want to sell those ever. So, but everyone's different, and I fully expect that there will be some people that decide to sell up. And look, we all know that it's very difficult. Let's, for argument's sake, say the loan token does 100x soon after launch, or within 12 months of launch. Not suggesting that is the case, but let's presume that it is. It's very hard for people not to want to sell those tokens. But the only thing I would urge people to think about is, why would you want to sell a high-yielding token such as the loan token, particularly given that we're all sort of hopeful that the Pulse chain will continue to appreciate. And you can imagine, whilst we've said in the example, $100 million loan, that's very, very conceivable if we get the appreciation that we're all hoping for with Pulse, to actually see those sort of things happen. So to me, I think it's a bit of a no-brainer not to do that. The other thing I did want to point out that I forgot to point out, whilst it's been really, it was a humbling experience. It was kind of, and to be perfectly honest, I woke up this morning at 2 a.m. and I thought, I need to get some sleep. Why the hell am I waking up at 2 a.m.? And I made the fatal mistake of looking at my phone, and then I saw all the notes, and I thought, oh my goodness. And what was really, not only did we get a significant show of support from Godwell, but he's locked up for 2 years. And I thought, this guy just gets it, or whoever this is just really gets it, gets the whole notion of locking up. And, he's shown that time and again with Hex. And I actually think he's obviously cottoned on to the fact that, hey, the loan token, some people have actually used the terminology. It's like the T-share in Hex, right? So this is something that you're going to continue to see appreciate and will provide you with the yield that you're looking for.
Yeah, I mean, it is. It's like the T-share, but there's no time limit. It's a timeless T-share because there's no time lock on it, or there's no end date. So you could keep it in the staking pool. And this is what happens with the clickening happens with people. Obviously, the first thing when you find out about liquid loans is great. I never have to sell my pulse, which is amazing. But then when you get into the ecosystem and you see, hang on, this is the fee generating token. Anyone who uses the system, whether they're redeeming Pulse for USDL or taking out a loan, there's going to be a small fee, and that's going to go to the loan stakers. And as the volume increases, more fees in the system. And I think Jexxa has done some great modeling around this as well. As the price of Pulse goes up, and the loan token should go up with it, and along with all the fees in the system. So it's actually a really good topic you brought up, because I think everyone, if they haven't watched any of Jexxa's videos, should definitely go over there, because he does go quite deep. Not deep in a complicated way, but he just really explains it really well in a concise way. So
I totally agree. I think that was the one. Like, I did have a chat with Jexxa about it beforehand. I said, mate, this is what I think. He's amazing with his modeling work. We went through the model, and then he's come back and said, what do you think? And I said, look, this is definitely very feasible. We can see this playing out, and I think the community needs to hear about this. So if people haven't been watching Jexxa's content, like, I'm a big fan. I'm a huge fan, actually. I really like the way he presents some of this. And so whilst I've raised this zero fee concept on this particular stream, Jexxa's gone into a lot more detail. And as you said, it's not overly complicated, but he's obviously provided us with some insight. And particularly for people that may not be aware of the benefits of using the protocol, it's well worth a watch.
Absolutely. So guys, I'll link Jexxa's channel below, and the videos we're talking about, they'll be in the description, so you can go and watch those. Before I let you go, CC, we've only got, is it 4 days left now before the bonding curve
so I think we're in day 6. So we've got 4 days before the bonding curve starts. So if you are thinking about sacrificing, and look, it's your choice, but if you'd like to sacrifice, it probably makes sense that you do that before the bonding curve kicks in.
Yeah. Well, thanks again for your time, CC. I really appreciate you coming on and talking about this. I think it's an interesting topic, and everyone should, at least get all the facts before they make a decision for what they want to do. So thanks again.
Yeah, thanks for your help, Matt. Thanks very much.
So I hope you enjoyed that video with Cristian. If you're not a subscriber yet, guys, do hit that subscribe button and that bell icon so you're notified every time we drop new videos and new content on the channel. You can also share the video with someone who you think it may benefit. Gently tap the like button, and if you're feeling very nice, you can even drop a comment below for the algo. It does help us out. Thanks for watching, and I will see you on the next one.